Good afternoon, traders. Howdy. How do I fix that? I'm not going. Probably fixed it. What's up? Anybody else out there? What's up, guys? Well, we're waiting on Apple, so I'm probably, like I typically do on these Apple days, just gonna kind of give an abbreviated meeting till 4:30. So maybe we'll do a little bit of a lesser Q&A today, and then we'll just watch Apple at 4:30. So let's jump in. I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA/SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Today is Thursday, May 2nd. It's Apple Day. I got out of Alibaba today. Kind of excited about it. Also sad to be out of it. I think that the stock's got a lot more room to run. I will look to get back involved, but hit my target today. I also got out of TQQQ today. I didn't have very much of that left. I just want to reassess that position. And even though I probably shouldn't, I'm in some Peloton, which, happy to talk about it. I traded like a complete and utter jerk today. And I completely, like I said it earlier, I really did. And the worst part about it, maybe not terrible for me because at least I know I traded like a jerk, is the worst part about it is that it worked out for me for the most part. And that's not necessarily a good thing. Again, I've been doing this for a long time. I don't think it's going to negatively impact my overall thought process when it comes to trading. But one of the really hard parts about trading psychology is that sometimes you can kind of do all the wrong things and make money. And sometimes you can do all the right things and lose money. And when, especially if you're a newer trader, it can really be reinforcing how you make and lose money. So, like, especially if you're newer and you do the wrong things and you make money, it can teach you that that's the right thing, and that's not good. Or the opposite. You do the right things and you lose money, and you go, oh, I can't believe I lost money. And then you don't repeat those actions, even though those are the right actions that will give you consistent profitability, because we do work in a game of probabilities. So no matter how good of a trader you are, you will have losing trades. So I always think for traders, when they're doing their trade review each evening, when you're doing your journals or whatever it is that you do, you're assessing your trading throughout the day, you really want to analyze the process more than the result. Was your process sound? Did you do all the right things? Did you put yourself in the position to make money, yet at the same time put yourself in the position to have an appropriate loss if the trade doesn't work out? That's really what you should be assessing in your trading on a day-to-day basis. So, for myself, if I'm assessing my process was pretty bad this morning. I was just, I don't know, I was too excited. I got up real early this morning. Even when I went downstairs at some point during my research process to make breakfast, my wife was down there and she made a comment to me about like my I don't know how hyper I was basically this morning. I have no idea why. Maybe I just had a little too much coffee or didn't sleep enough or slept too much or something. I really have no idea. But it definitely translated over into my trading this morning. I traded like an absolute maniac. I did a boatload of volume in Penn and Peloton, particularly in Penn. And again, it really wasn't the right mode. So I need to take a half step back and make sure that I'm approaching the market appropriately, and thank the heavens that I didn't damage myself really from a P&L perspective today. And actually, again, if anything, it kind of benefited me. So it just is what it is. As far as the market goes, the SPYs finished up 0.9%, the Qs finished up 1.3%, the IWM finished up 1.8%. Really strong day today. The market worked its way higher. That's really what we wanted to pay attention to. It was almost an inside day. It was almost an inside day, but it wasn't, because we kind of just shook everybody out a little bit. So what we discussed in the morning meeting today is Yesterday's range high and low is going to be pretty important for today's trading session as kind of some immediate levels to pay attention to. Just because we had that really wacky day yesterday with this big sell off into the close. And then we were gapping up this morning to pretty much the midpoint of the Fed range. Gapping up to 504, lows were 500, highs were 508, we're opening at 504. The market big picture is neutral. These candles, these last two candles are definitely more bearish than bullish. The big picture is more bullish than bearish. Like, you almost can't get more neutral than this. I really described our open today as kind of a coin flip, and just pay attention to which way the market breaks for clarity. Know your levels, and you can also potentially focus on stocks that are in play to have something that could give you maybe a little bit more conviction. And it was still kind of a wild morning. We had that big gap up, $4 gap up to the midpoint. We traded all the way down to fill the gap and overshoot yesterday's low to shake some people out a little bit further, just to have that be an absolute bottom, kind of V-bottomed there with that inside 5 and up, back through this 500. I think we even called out a long here, back through 500, if anybody wanted to take it. Really just for like an oversold bounce trade at that point, but it turned into something more. We had a pretty impressive rally here for the rest of the day, but at the end of the day, we still don't have any clarity on the SPY daily chart. You could certainly say, just from a candlestick analysis perspective, that this is a big improvement from the last couple of days. We had a negative Maribozu, we had an upside tail. Well, today we have a downside tail. So bulls are closing in control today, but they haven't cleared through any major levels, at least as far as the SPY is concerned. The Qs are pretty much the exact same thing. Very almost an inside day, but not an inside day. We broke yesterday's low by 3 cents, filled the gap, overshot yesterday's low, shook some people out, inside and up, V-bottom, grinded up the rest of the day, but never cleared back above any major levels. The IWM is where the most amount of relative strength was. The Russell closed up 1.8%, and the Russell closed, again, pretty much right on this key $200 level. 200 is really important. It's really important on a weekly chart. We've noted that really important level multiple times, going back to August 2022, January 23, July 23, and then we had that like higher low here on this weekly chart with this bullish consolidation that pushed us through 200, got us to 210, held it as support. Things were looking great, and then with this broader market sell-off, we came back below it. So 200 is a super important inflection level on the weekly chart, and we closed right on it, which is also pretty much coincides with yesterday's high. It also coincides with this absolute high of the market bounce off our April low. So really, really important zone here. And again, even with the IWM, and the IWM actually did have an inside day, it didn't break above or below any major key levels, but managed to close right on this key upside level for the Russell. So I would say that is pretty positive, but we still need the market to confirm its break. Maybe that happens by tomorrow. We've got Apple reporting in 10 minutes. We've got, and remind me, I know it got posted earlier. What's the measured move on Apple? Is it like $7? I know it got posted and I was doing something else. Someone remind me. 7? Thanks, Tate. Where is Apple? Where did Apple close? 173. Okay. So 166 on the downside, 180 on the upside. Yeah, so maybe between Apple and the jobs number tomorrow, we'll get some clarity on how these levels break. But yeah, I mean, that kind of sums up the market. From an idea perspective, I think that there were a lot of good ideas thrown out in the morning meeting, and a bunch of them worked pretty well, except what I ended up focusing on. I mean, we could just take a recap here. Wayfair, we decided kind of opened up a little bit too high. Originally, I wanted to look long versus, I don't even remember, 53. But yeah, it just kind of opened up in outer space. So that kind of was off the table by the time it opened, and ended up being a little bit sloppy throughout the day. Carvana did a great job digesting its gains all day. Qualcomm did a great job digesting its gains all day. What did Herbalife do? A little disappointing. Nothing going on there. The PDD idea worked out really, really well. The Chinese names were just on fire today. Don't really like this company. I always want to make that clear. But it was a very clean level here at 130 for a break, and I was glad to see that a few of you guys got involved in that. I ended up, getting stuck in a battle with Penn and to some degree Peloton. Really more Penn, but the problem was I was so focused on Penn that I didn't properly manage my risk on Peloton on my opening trade, and I didn't get myself stopped out where I should have been. And then by the time I was able to get my eyeballs back on it, it was more about damage control really than anything else. But yeah, I mean the Pen is the one that I keep saying I traded like a jerk because I was buying it on the way down. I was doing exactly what you're not supposed to do. I mean, part of it is that I was swinging it into earnings, and I have a specific game plan that I need to follow. And that game plan does include, to some degree, buying it incrementally on the way down at certain price increments. But at a certain point below 15, when the extension was getting big, but it really wasn't at a point to try to take a stand in this thing, I decided to take a stand in it. And I just did it way too early, and I did it way too heavy, and I kind of did what you're not supposed to do, which is I just averaged down on size, and I averaged down on size, and I averaged down on size until I got really big in it, and I managed the position, and I managed it to the moving averages on that bounce. It was just really, really wild looking at my executions on my other chart on how I sized this thing in certain areas, and it was just completely bonkers. The amount of stock that I bought right here was an insane amount of stock, which happened to be pretty close to the low, and bailed myself out on a lot of the other stuff that I was doing. Here you can just see the sell executions just pretty much all the way up to that $15, which really my first heavy buy was at like 1475-ish or something like that. So I was wow, 1475. This is such a bad job. This is insane. So I was, I don't know, $1.25 out of the money on my first large purchase in this thing, and then this one I just like pretty much doubled my entire size around this 1365 or so, and you can see this swoop of dots here. That was basically just one market order where I crossed the market on a ton of size and just took out every offer between an entire range here of liquidity of like 10 cents or something like that. Oh my god. Oh man. And then looked real hairy here when I broke that low, but it held that 1350. And then I was just dumping up into this ADMA, which is always that first target for the oversold bounce, holding more of this bigger size I was piecing out of on the way up to 15, and then basically I just totally traded my P&L at a certain point. Honestly, when it got back to a little bit above that initial larger buy, I just dumped that entire larger buy at a little bit better than break even on that purchase after holding it $1.25 or whatever against me, and then was just kind of back to a more normal core type of position that I was able to just kind of trade based on my game plan. So yeah, terrible job. Could have managed to have like a very, very large loss on that, and didn't at all. I am still red in the name, but again, I was holding some into the earnings report, and I'm actually up pretty significantly P&L wise on where I would be just based on the amount that it closed down versus the amount that I had going into the report. So it actually worked out really well for me. But then the other mistake that I made was Peloton. My game plan was to stop myself out at 330 if my idea was wrong, and my idea was totally wrong. You can see my buys here in the 350s and 340s, and then average down a little bit at like 335. Supposed to stop myself out below 330. Didn't have a stop out. Not even watching the position because you just saw my execution dots and pen. 100% focused on it. By the time I typed that thing back up, which is probably after pen was rallying back a little bit. Let me guess. Yep. No coincidence there. It's 10:20 and pen's all the way back at 1460 or whatever after rallying $1, where I say to myself, oh yeah, look, like I wasn't too heavy in this Peloton position. It wasn't the end of the world, and it's a $3 stock. I could kind of handle it, but it doesn't make it a good job. It really doesn't make it a good job. And then I was like, oh yeah, you know, like I better look at that Peloton position I'm losing money in and see what I can do here to try to manage this position and trade out of it a little bit. So nibbled small, and then I took bigger bids here into the mid to low 270s, pretty much at that bottom, which I was able to dump on the way out. Yeah, 100%, Dennis. I like couldn't even read what was going on in the VTF. I was just so focused on the size of the execution and the tape and the chart and the game plan, or creating a game plan on the fly, which I always preach you should never do. Have a game plan, follow the game plan, stop yourself out, manage your reward properly. It all went out the window. So I don't know. Like I said, I need to go for a run today or do some extra Tai Chi or something like that, to make sure I got my head screwed on properly going forward. Because, you know, making mistakes like that, especially the amount of time that I've been trading, it's really pretty unacceptable, to be totally honest. Yeah, seems like every once in a while, yeah, Rock, every once in a while, every, you know, 6 months to a year at this point, I still find myself going a little haywire. And I guess today was that day. So I'll do what I do and recuperate mentally, and just, you know, it's like I tell everyone when you have a bad day, and honestly, P&L wise, I had a great day. But it's not P&L, right? It's process. So what I tell everyone when they have a bad day, whether it's P&L wise or otherwise, is you got to regroup, you know, focus on doing the right things. My mantra is all I need to do to be a successful trader is to do the right things consistently over time. And I know that if I just do that, just do the right things consistently over time, I will make money in the long run. And I did not do that today. And it is what it is. Today's behind me, and it doesn't matter. My account doesn't matter. My size doesn't matter. My P&L doesn't matter. I just need to make sure that tomorrow when I wake up and I log in, that I follow my game plans and I manage my risk and I just do the right things consistently over time. That's the key to the business. So on that note, we've got 1 minute and 15 seconds here till Apple. So I hope everyone is excited. Seeing some questions pop into the YouTube. I don't know if I'm going to be able to answer them. Do you think we gave back too much of the gap up in the first 30 minutes? Yeah, this morning was wild. It was really tricky, the fact that we broke yesterday's low and shook everybody out. To give you a very quick answer, less than a minute for any other questions. Also, do you like Google and MU for an insider? I definitely like Google. I already know what the chart looks like. I don't know what the MU chart looks like. Yeah, maybe. Maybe. You could try it. Also look at TMDX. Wow, nice move. Great job. Great call. Nice job. ASPN had a great earnings reaction. I sure did. And BPCM. All right, I got 15 seconds here. Initial tick is higher. Bill, you are so fast. iPhone revenue is a beat. Greater China revenue, that's the important one. It beat. That China revenue number beat expectations. It's down 8.1% year over year, but it beat. I think that's pretty important. Apple announces an additional buyback of 100. I just bought. I gotta buy some stock. Oh, my button didn't work. There we go. Apple announces additional buyback of $110 billion. Forget about it. Just forget about it. The buyback number is so insane. So insane. Is it possible for the stock to go down when they can buy stock back like that? I just sold some. $110 billion additional buyback and boost their dividend. Why not? I haven't even read the rest of the numbers. Apple second quarter wearables is a miss. Revenue overall is a beat. Mac revenue is a beat. EPS is a beat. None of these numbers are knock your socks off beats, but I think that the China number is important, and obviously the buyback. The buyback. It's ridiculous. They have more cash on hand than the U.S. government? Yeah. They're certainly a better company than the U.S. government. I can tell you that. Just took some more off there. I just saw that buyback number, and I was like, I don't even care what the price is. I don't care where it's trading. I'm buying. Oh, man. It's so wild. Yeah, the sentiment going in was also really bad. They had beaten the stock up into the report. Boom shakalaka. See if we can clear this 180 here. I haven't really been watching the tape too closely. Cute little dots out. Bada bing, bada boom, bada bow. Couldn't quite get to that 180. 179.96 high. Sure. Thanks, Bill. I'll try to keep an eye on it and see if we see anything interesting. I haven't seen like really any natural buyers or sellers in the tape yet. No real refreshing buyers or anything like that. Though the bids are clearly stepping up. There's some liquidity that came in at 179, but it's 25,000 shares or whatever. It's not a big deal. They printed some of it on ARCA. They couldn't really clear through it, and they just cleared through it. That was a very small amount. So your upside reference point right now is definitely 180. It's a nice round number. There's some liquidity posted up there also, but probably isn't too bad. And again, I haven't seen any like major clear obvious buyers or sellers that have come into this thing. Here we have a retest of highs. It just took some off at this 180. Looks like there's 100,000 shares at 180, which is absolutely nothing for a stock with its 74 million shares today. But you can still see like when they first cleared that 180, there's that flush through 180. Back in the day, I used to know traders who would just look for levels like that, and they would just hyper scalp those breaks, basically. Like, the 180's breaking, you're going to get that quick 22-cent pop. You buy, if you're super fast and you got good execution, you buy the break of that 180 and insta-scalp the, 15, 20 cents that you're able to get from it. Yeah. 180 is definitely selling a little bit. That offer keeps kind of popping back in. I haven't seen anything real clean. You want to try to look for like buyers or sellers that are being sneaky. Yeah, 180's dumping kind of hard now. Yeah, but they just cleared it again. And again, there's a big pop when they're able to clear that, because no one's gonna offer behind 180. You want to expect that there's going to be no liquidity there. If you see like 180's holding, there's even in this case small amount of size, 100,000 shares there, they're clearly more than that sold. If you were looking to sell Apple, are you going to sell Apple at $180.05, or are you going to sell Apple at $179.95? And the answer is you're gonna sell below 180, because you're seeing that 180 is holding. Why would you sit 5 cents behind it? You're gonna sell in front of it. You're gonna sell in front of those whole numbers. So when they clear through the liquidity on those whole numbers, you see those like real quick pops, and a lot of times during the trading day, those are like stops. You know, all the stops trigger, all this, everyone that had a buy stop at $180.01, all those stops trigger. You get that quick wave of buying, and that's how people also get outside slippage sometimes. Is that there's just going to naturally be less liquidity there because, again, why would anyone do that? And now what we just saw there a little bit, which is definitely what you want to see, is 180 just held on the bid as a retest. So we'll see it now, nothing, like butter. And then there's almost, you know, these inflection points, the price action can be so whippy because, you know, you have these like scalper traders who bought that break of 180, caught the 78-cent move, maybe sold some into that move, but they're also then planning on liquidating below 180. So you saw there that it retested 180, it held once, it bounced back to like 180.30 or something like that. So that's technically a little bit of a lower high. You're not going to see that in the chart, you're going to see that in the tape. But what does that lower high mean? It means that sellers stepped down from the 180.78 to the 180.30 or whatever it was, and then when that 180 broke, then you have all the people that basically scalped long through 180. It's almost the opposite. There's a little quick liquidity crunch below 180 because everyone's rushing to exit at the same time to get out to preserve their profits because they just bought that break a little bit ago. Extension rules still matter. You know, stocks trading at 170, stocks ADMAs at 176, stock was trading at 179. It is earnings, so it's obviously where momentum can take place. But yeah, that buyback, $110 billion. Can you guys just toss me, a few $100 million? I'm a loyal Apple user. I guess they technically are because I'm also an Apple shareholder. Trade the name a lot, but also keep it as a long-term holding. Got it in the IRA, got it in the personal retail account. No, I don't. You still, to answer, so Nick's question is, do you take into account extension and gaps as much on earnings? And as much, I still take it into account, but I don't take it into account as much. Or I still take it into account, but I recognize that I recognize that earnings and news is what creates momentum, and the definition of momentum is something that enables an extended stock to become even more extended. So that's what I'm thinking when I look at the gaps in the morning on these earnings plays. I think big picture, there's room at, there's resistance at 185 and there's resistance at 190, and I think that those are some big picture targets for Apple if you're long Apple at this point. There was solid resistance that it broke through at like the 177 to 178 area. So I don't really want to see this thing get back below 177. And if it's able to hold that, I would say, probably not today, but as a swing trade, yeah, I like 189. I like 190 as a little bit more of a reach target. I think $10 is very possible on this thing. I'm currently game planned with the position that I bought for a move basically to 187, which is kind of in the middle. You still have to recognize that they will have a conference call today. And I'm trying to remember, Apple is back to giving guidance on their conference call. Did they do that last earnings report for the first time? This was one of the holdouts from COVID when everyone stopped giving guidance. For some reason, Apple still stopped giving guidance for a long time. Not sure if anyone remembers. $700 shares. Not bad. Yeah, what else we got out? FTNT getting smoked. Apple there, 181. Just took some off. You know, the only reason that Apple's up is because Josh Leffler's buddy, Josh Brown, said it was going to go up today. Isn't that right, Josh Leffler? Yeah, Apple just cleared through that 200-day. Apple new highs. I'm kind of game planning to sell some basically every buck up. Nice little extra add-on to the P&L. Qs are moving higher as you would expect they would. Qs are still below yesterday's high though. Do I go lighter with trades like this? It's usually smarter to go lighter when you're trading something pre or post market. You gotta keep in mind some things when you're trading after hours. They move very fast, and you can't use like stop orders or market orders. So, you know, I really don't recommend for people who are like newer traders to do very much pre or post market trading, if at all. Pat, this reminds me of if you're listening. You remember that earnings report early into the COVID period from Apple, where I think they announced a stock split on that one, and like that huge buyback. Yeah, you remember. It was on the radio. We got that news out. It was that's when they split it. That was a wild one. Pretty sure you did well with that one. Pretty sure everyone did well with that one. Yeah, so it's the second I saw it, yeah, and shout out to Bill for getting that information in there. Bill, I owe you a beer or a lunch or something like that because you got the buyback info in there, and it was like auto buy for me. Cash flow is being pointed out. Apple about 107 billion with Microsoft at 71 billion. Those numbers are just insane. Just insane. They're still buying this thing up. See, there's a refreshing buyer. It just broke. There's a real buyer there. They're hitting it. 184. 184 was just showing 100 shares or like 300 shares there and just absorbed thousands of shares on the bid. It's worth noting. I couldn't see what ECN it was. I think it was NASDAQ. But there's a big buyer there. Can we get 185? 185. I'm seeing 185. Ah, nice. Yeah, that Apple China stuff is huge. I think I was worried about that. Stock got decently extended here again. SPYs are moving up. Still below yesterday's high. Qs are moving up. And does the IWM care about this at all? No. Not bad at all on 40 bucks. Quite the move. It's like my my uncle was like he's an artist. He was art director for the Wall Street Journal, and way back in the day, I feel like when Apple was like having that period of time when it was like a dying company, just loved the product for what it could do for his work, I think, and just bought the stock, and they still have it. I feel like they, you know, have been able to basically live off that purchase, live off that belief of Apple at this point. Now they sell some toy trains. If anybody is a train collector or have kids that are into it, that's what they do now. Mini pals. Anyway, back over to Apple. Still holding that 184 area. It was a quick down tick. Again, had gotten pretty extended. Our ADMA after hours here hasn't even caught up to 180. Yeah, just chase it. Just buy it back. Tell them there's a $110 billion buyback. If you don't buy the stock now, Apple will buy it themselves. Such a wild number. Well, things are looking pretty good. I assume there's a conference call at 5? Or is Cook already speaking? Or are those pre-announced comments? I'm pumped about those Greater China numbers. I'm telling you, the people over there really, really love their iPhones. Yeah, they're still not giving. That's what I was just asking that before. They're still not giving guidance, right? Which is wild. Apple's the only company that could get away without giving guidance and not have the stock get absolutely destroyed. I'm not sure, David York. Probably. It's some math that I'd be curious to do myself, actually, real quick. Yeah, seriously. I'd love a push to 185 here. I've sold more than half my position at this point that I bought. Sold like 70% of it. Like I said, I'm just game planning to be out by like 187 if we can get there. It's a big move. Yep, Apple's saving the day. Fixie trading down after hours. Mark it up. great call on that information with that buyback. It was just huge info. And it makes sense. I think, Dennis, you and I were talking about how their buyback was starting to dwindle down a little bit. And of course, they're not going to stop buying back their stock. They have too much cash. Yeah, there's definitely some resistance on the daily up here. There we go, 185. Apple is back in play. Probably never see that 165 again unless the whole market dies. Yeah, they'll just buy it back incrementally. That's the one thing about buybacks. When you announce the buyback, you're inherently, talk about showing your hand. Retest of 185 here. It held. Some decent little buy in there. I wouldn't be surprised if this thing really stalls out here in this 185 area. It would just make sense. Lot of kind of resistance in this zone. It's a big move into it. I'm not saying it can't continue, but pausing in this zone would make sense. I'd like to see it tick 187 because that's where I'm offered to basically get out in that area. Yep. But I'm sold off a good percentage of my position at this point. So it's a good one. It's been a good earnings season so far for some after hours trading for me. Well, all right, ladies and gentlemen, approaching 5 o'clock. We got good news here for the market. We'll see if this is enough to get these spies and Qs above yesterday's highs. I got a feeling that it might not quite be enough, that we need some help from the jobs number tomorrow morning. So we'll see how that goes. I assume it's at 8:30. And that's pretty much all she wrote. So I will wrap it up here for today's afternoon meeting. Again, big shout out to Bill K for getting that information in super fast. Thanks for making me a few bucks. And that's it. So have a great night, everyone. See you tomorrow.